down 81% in 2022. Is snapstock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is revenue growth quarterly for Snap going back to before 2017. And you see explosive revenue growth from Snap here, going from uh, close to, less than 100 million in revenue all the way up to 1.128 billion in its most recent quarter. That was down from its peak over 1.2 billion, and the company has faced several headwinds, including the most significant one, which is privacy policy changes made at Apple that makes it more difficult for Snap to show targeted advertising by collecting user data outside of its internal platform. So that's going to continue pressuring its revenue. And then there's also other macroeconomic headwinds like what the impact of the Russian invasion of Ukraine is having on European businesses, and then also the impact of rising inflation and supply chain shortages. All of this is working to decrease advertiser demand and is hurting Snap's revenue growth. Okay, so that's going to continue to pressure, at least in the first uh, 2 quarters, I'm going to say, of 2023. It could go longer than that, but I'm suspecting at least in the first 2 quarters for those macro headwinds to impact Snap's revenue growth. The next thing I want to look at is its operating income. Given that the company has such nice top line revenue growth, I would like to see some expansion in operating profits, which I don't see here. Going back from 2017, all I actually see is flat-ish or downward trending operating income. So as it increased revenue, it just lost more money in terms of operating income, and that fell all the way down to 435 million in its most recent quarter. I would have liked to have seen more progress in this regard. So this is not very good evidence that it's benefiting from its economies and scale. The next thing I want to look at is cash flow from operations, because a lot of tech stocks, they're able to generate positive cash flow even though they're not profitable on the bottom line by using a lot of stock-based compensation. I want to see if that's happening at Snap, and it looks like it is. You can see cash from operations steadily rising over the years, and a positive 55, I would say 56 million in its most recent quarter. So you are seeing that trend of positive cash flow from operations, which is good news because then the company can be self-sustaining. It doesn't need to go out, sell more stock to raise cash, doesn't need to borrow. It can sustain itself through cash flow from operations, even though it's not profitable. And then, of course, if you're giving out a lot of stock-based compensation, you run the risk of diluting shareholders, and Snap is doing that at a large scale here. Average diluted shares outstanding went from 1 billion before 2017 all the way up to 1.6 billion. So 60% more shares have came into existence since 2017. That means eventually, if the company does ever become profitable, those profits are going to have to be split among more shares, thereby decreasing the earnings per share for those people that have shares. So this is not good news for existing shareholders. And finally, let's look at Snap's valuation. Since it did have some positive cash flow, we could use the price to free cash flow. And if we want to get more data, more time data, we can use the price to sales to go all the way back to before 2018, because it only recently was cash flow positive, and so we only have data for until 2022 for this one. And looking at price to free cash flow of 106.8, that's cheaper than it was, of course, at over 300 price to free cash flow, but it, in my opinion, should have never been that high. At 100, it's still expensive, but cheaper than it was. And then looking at the price to sales, it's trading at 3.2, which is the cheapest the stock has ever been, going all the way back to before 2018. So on a price to sales ratio, the stock looks relatively cheap. And price to free cash flow, it's the cheapest that it's ever been, even though we don't have very much history, so you can't take much meaning out of less than 1 year's history in this regard. So to answer the question, is snapstock a buy for 2023? I'm going to say no. The the fact that it's trading at a 106 price to free cash flow, which is more expensive, way more expensive than the average stock in the S&P 500. The fact that it's still grappling with macro headwinds that are likely to persist at least for the first half of the year. I'm going to say to hold off on buying snapstock for now. All right, that's all I've got for this video. Thank you for watching as always, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.